This is a demo of just how to use the price targets, the Linton price targets that are now on the Bloomberg app portal. And the concept is really simple. There's a much longer video with all the different settings. But the key thing about these targets, they're based on an old point and figure technique that was invented in the 1940s. Most technical analysts will know about this. But it brings these targets onto time-based charts, so it's quite groundbreaking and unique. They've been used by updated users now for well over a year. Had a lot of great feedback on them, and more people have been saying to us, "Can I get them on my Bloomberg?" This is very much the way to do that. So basically, this thrust that you see here on the chart, this initial move, that is what then generates at this dot this target. So this target was drawn on this chart when that dot was shown. And so it's really quite key. It's just a very simple idea that initial thrust leads to this overall potential on the chart. And the way to get these, any user can get these on the app portal. Just type app LIN, LIN, go, apps LIN, go, and there's an explanation here with all of the different explaining how to use these, so you can just go through and read that. But the longer presentation here, the Bloomberg Targets presentation, that's a full-blown 90-slide support explainer with an hour-long video, so that people can learn how to use these targets pretty quickly off the bat. Now, there's three main elements to the targets, and they are shown in the studies. The first one is Linton levels, and that's really very simple. This just draws support and resistance lines, and you can set these, but in this case we're looking for a high where it's the highest high in the last 3 bars, and the 3 bars afterwards are no higher. So it's a, if you like, it's a high point either 3 bars with 3 bars either side, and that when then we draw on the last 2 levels, you can draw on broken levels as well. It's really quite useful to see where these support and resistance levels are, and we use those in conjunction with a target. So that's really important, and I'll explain that as we just look through some charts here. The midpoint average is a 21-day average of the midpoint of trading, and my theory here is that this is much more important than a moving average. This is the midpoint of the trading range. In 24-hour markets, moving averages almost make no sense now. And so it's this midpoint of the trading range that defines the trend. And again, we use the trend to accept or reject targets. And again, this is a really simple thing. I use 21 days. That's roughly the number of days in a month. You can change this however you want. There's a description, and you can change all the display settings, etc. Now, the target settings, and again, these are explained in the longer explainer. There's lots of different settings for the targets, and there's different ways in which you can project them forward. The defaults is what we recommend for any new starter, so those are all set up there. But again, in that hour-long explainer with the presentation, there's lots of different methods, including one that looks back at all the targets historically and says, based on all of those targets historically, this is when the price should be met. This target should be met. So it's quite clever, and you can get as clever as you want with this. So that's an example just looking on the S&P. Here's one on BP. This was the thrust that was given, downside target given, and that was given at that point. It draws these targets forward on the chart. Quite often on Bloomberg, you need to manipulate the chart in order to see those targets. Here we see on BP, we had an upside target that was given and met, a downside target and given and met. The targets are approximate, of course. They're not precise, but they are really useful for getting an idea of this initial thrust. Now on this one, we've got pretty much still a downward trend, so we'd be cautious on this target, and so certainly that's something that is worth considering. There are resistance points here to get through, so that's a mixed picture with mixed targets, so that's just quite an interesting example. Here we're seeing 10-year yields, downside target given, met, upside target given. We're on the way to that target, but we're now starting to wander away from the target. Again, the longer presentation explains this. And here we see 4.5% is the level that we need to break to then start thinking more about this target again. Looking at the dollar, in this instance, actually, I changed the target size and the unit size because I wasn't getting a target. And again, this is explained in the explainer. So you don't always get a target. So the standard setting is 0.5. Here we've got 0.25. If I go back to 0.5, you'll see that the target comes off the chart because we don't have the structure of a thrust, a pullback. We didn't have enough of a pullback on that unit size to generate a target. So in that instance, what we've done is we've made it more sensitive by just changing the unit size. And as I say, that is explained in the longer presentation that is designed to help users get the most from this. And so there, that target comes back. Now, that target is very alluring at the moment, but from a technical analysis point of view, we want to see a new high, and then we'd start to look at that. The target was given at about 104. We got to 108. That's halfway to the target. And now we're pulling back, and the key thing is we've got some support levels kicking in. After 3 bars, we've got a new support level here, and that needs to hold. So that's certainly what we need to watch. But interestingly, we have been above trend. We're now just wandering below that trend, so a little bit of uncertainty on that. Here's another good example. This is crude oil. Downside target given here happened faster. Another one given here was met. Another one given here was met. Upside target. Now we've got an upside and a downside target that was nearly met. You can't ignore the fact that if we make new lows on crude oil below 70, that would be really very significant for the price. So you can go back a long way on crude, and you can see that. And I can go and put more targets on the chart. So if I want to do that, to see how well these targets have worked in the past, I can just literally go down and say, okay, how many targets do I want to put on the chart? So here I've got 5. I could say 55, and let's just see that number of targets on the chart, and you will effectively go and calculate those 55 targets, and now you see all the historical targets showing up on the chart. So you can go along and you can see here we were getting upside targets in the uptrend, downside targets in the downtrend. So really quite key there. So really very interesting picture there for crude oil, and that's at the moment it's a little bit of a sideways move. Above 80 would be bullish, below 70 would be bearish. It's really pretty much that simple. Lots of resistance levels there kicking in. That 70 support level really needs to hold, which is marked on the chart. So taking a look at gold, this one's a very interesting one at the moment. We got 2 unactivated targets. So this target is, if we make a new high above this level, 27.21, if we make a new high above that level, this target turns green, becomes a solid green. We'll put the price on the target. If we move below this level, then that target will be activated and it will turn red. And so all of those things are configurable in the system. And so you can literally go and look at the configuration, so you can have literally all different colors here, and again those are all explained in more detail in the longer example, but that's a really interesting situation waiting to play out. And another one that I talked about in my charts today comment this morning was here on Bitcoin. We had these targets given. This one took longer to be met, and this one happened faster. So we know that this is roughly, it's going to tell us when we draw targets at this rate. This is a target rate of 1-to-1. We know here that it can either happen a bit later or a bit sooner, and we've exceeded the target, and that's also bullish behavior. If you pass upside targets, that's bullish confirmation. So that's just a little bit of an explainer, and I hope that helps you understand using the targets on Bloomberg. The key thing is to get on apps, apps.go, apps LIN Go, and that will give you the targets to play with on your chart. So why not give them a go? I think you'll find them very, very powerful. No, you can just do them on any chart, of course. So it's a great way of getting some forward idea as to where the price is going. If you want any more information, just let me know. Bye for now.